I'm so glad you chose to join us here on the 2018 Individual Tax Update course. I am super excited to share this information with you. I have been studying so many of these tax law changes that we've been faced with for a great long time now. So this is the accumulation of all that. We know that the Tax Cut and Job Act was signed into law in 2017, and along with it came substantial changes to tax law that we've not seen for over 30 years. So most of these changes are effective the beginning of 2018, and they absolutely affect our taxpayers. So in this course, we're going to touch on what it is that we'll be covering for you. We went ahead and divided it into two parts, so it's like a comprehensive guidebook for you. In part one, we cover individual and gift and estate tax and even a little bit of foreign updates for you. In part two, it's more focused on the business side of the updates. So business, credits and deductions and all kinds of things, depreciation, etc. Partnership rules, tax exempt organizations, state and local taxes. So we kind of give you everything within those two parts. You can consider it a bonus update because the Section 199A, that new deduction, is so massive. It has a separate course that's been created. So if you really want to dive into that, we just kind of touch on the highlights in this, but there's like an extra course just on that one for it. So we're going to go ahead and dive right into it. I did want to let you know there is a manual available that is out on my site, taxedge365.com/canopy. So even though we'll be touching on a lot of highlights, you'll find even more material there. So we're going to dive right in here. And what we're going to be covering in this part one is the individual tax updates. So we'll talk about that new postcard form and the schedules. We'll look at the new tax rates and exemption changes, which are pretty substantial. Credits, new credits, changes to credits, deductions, many changes there in the deductions, and a lot of other miscellaneous ones. So that's all within the individual realm. We'll touch a little bit on the gift and estate tax changes and talk about the FBAR update as well. So lots and lots of information here for you. So diving right into that, we're going to first talk about the new forms, the individual taxes. The way that these forms look are altered from what we have seen. And if you've been in preparing taxes as long as I have, we've grown accustomed to the look and feel of the 1040. Well, the simplified ones, the 1040A and the 1040 Easy, are now gone. The idea was that they came up with this simpler looking 1040, and we're going to look at how this really lays out. Basically, your page 1 and page 2 are smaller. In fact, each of those will fit on a half a sheet of paper now. And what they've done all that stuff that was on the 1040 isn't that it's gone, they've just moved it off onto 6 new schedules. So we're going to go ahead and give you some insight into what those look like. Now, if many of you use tax preparation software, this is going to already be programmed into that software. I actually cannot imagine the undertaking that is for software companies for this year. To look at the very first part of this, if we look at page 1, this is really just been shortened to demographics. Now you have to look though, I know it's really small on the screen, but if you're looking on the right-hand side of this form, there's lots of little check boxes. So watch those. It's very different than what we've seen in the past because things have moved around. But this is basically taxpayer information, dependents. Now we'll talk about later how dependents kind of really are there for purposes of credits, but they really aren't there anymore because there's no more exemptions. And then paid preparers on here, the signatures on here. Basically, page 1 is just demographic information and the taxpayer signature. As we look next at page 2 of it, that is some other basic income and deductions and credits. So most of the meat of, if it's a little more complex, is going to be on the schedules that we'll talk about next. But this is like a very shortened version of what we used to, feel and look and see and be accustomed with what our 1040 used to look like. Where all of our numbers appeared is now condensed into the second page, and a lot of this is totals or refers back to many of those other schedules. So think of it more like totals that are carried forward from other places, and then if there is a direct deposit desired for the refund, it's on here as well. So it's a little bit different look and different feel. I would encourage you to at least, before you prepare your first one, is just look at this form and see how things have changed and where it's a little bit different in its design. The new things that have been added as part of this is all these additional schedules. So Schedule 1, because really on the form itself, it just says a section that says, oh, total income. Well, wait a second, what is total income? That's going to come from a separate schedule that talks about additional income and adjustments to income. If it's not something super basic like wages and interest and maybe a little bit of pension or Social Security, I mean, if it's anything beyond that, then it's going to live on all kinds of other forms. So additional income and adjustments to income is the name of Schedule 1. But as you can see in here, they have all that we used to kind of see a little bit more on the face of the 1040 separated into a separate schedule, Schedule 1 now. Schedule 2 is for tax-related things, AMT. Now, they're expecting that not as many will be subject to the AMT, but excess advanced premium tax credit repayments, and then it was kind of, if you remember the old form, previously lines 44 through 47 of the old form live over here on, even though it's teeny tiny, on this separate schedule now, Schedule 2, which is just for purposes of reporting tax information. Schedule 3, because the refundable credits are over on the page 2 of the 1040, non-refundable credits over here have their own separate schedule. So foreign tax credits and dependent care expenses and education credits and retirement saving contribution, all these various ones all live on a separate schedule now. So for many of these, we're going through, if it's anything other than the most basic return, we're filling it out on numerous additional schedules, bringing that total back over to that page 2, the 1040, and that's really what our taxes and tax returns are going to look like for individuals in the future. Schedule 4 is for other taxes. So kind of, if you remember to your 1040, previously things that lived between lines 57 and 63 on the old 1040. So here's where your self-employment tax lives, and additional tax on IRAs. And a lot of these that were part of a little section on the 1040 have been separated out onto their own schedules. So Schedule 4 is for other taxes. I find it interesting they didn't combine a schedule for taxes and other taxes altogether, but they kept those as two separate schedules. But Schedule 4, as we look at, we have 1 through 6 now, is for those other taxes. Schedule 5 is for other payments and refundable credits. So that one is, a lot of them at least explanatory in the names of the schedules. So there's a lot of these that have reserved spaces. That's just because they're just reserving them for future purpose or expectations of what they're going to add to the schedule. But as you look in here, let's say credit for federal tax on fuel. Some of these obscure little ones that you want to still account for are going to be separated out onto this whole separate schedule here. And you can see as you look at checkboxes, many of them have a lot of reserve spaces on this one, but this gets added in, and these are where they kind of tell you where to put them back over on the 1040. As an example here, it says these are your total other payments and refundable credits. Total them here and then move them over onto line 17 of the 1040. So the 1040, of course, is completely renumbered now, and a lot of these numbers, when we're used to having it a certain way, we can't really rely on those numbers anymore. Everything has been renumbered with these new forms. As we look at Schedule 6, well, we'd say, gosh, we don't really probably have to use this for too many because it's for foreign addresses. But if you are one that likes to put a third-party designee on your tax returns, you have to fill out this Schedule 6 to be listed as that third-party designee on a tax return for each one that you want that designation. So you have this little teeny tiny 3-line extra schedule to have to attach if you're wanting to use the third-party designee for those returns. So it is different looking. I mean, it's just up to us to become accustomed to it and how they look and feel. It's going to be different for our clients. So we anticipate, there's going to be a lot of questions helping them to navigate it. But we wanted to spend most of this course on talking about all the different tax law changes, but just to at least familiarize you with what these forms look like now. One of the other major changes is all of our income tax rates. We have new tax rates, of course. So what I did is I wanted to lay it out maybe a little bit differently so we can get a feel for what these rates are and how much they may have changed. So if we look at, there is still, the 10% rate still exists. So what you see here on my chart, when it says 0, it just means there was no change from what it was before the Tax Cut and Jobs Act to what it is now. So no change at the 10% bracket. At the 15% bracket, it went down to 12. So we got a little bit of a decrease there. what was our 25% became 22, so another decrease. Those that were subject to the 28%, that dropped to 24. Those in the 33 dropped to 32. The 35, you'll see, was no change. 35 remains 35, and then our 39.6 dropped to 37. So for the most part, most all of our brackets went down. So that is a great positive change for our individual taxpayers, that they're not spending as high of a rate. Now you have to also look that there are all the different income amounts that have also changed that are subject to those rates. But for the most part, the rates themselves have dropped. So that's one of the changes or the takeaways as well.